Tax brackets are like income groups for taxes. Each group has a different tax rate. Think of them as levels. You pay a certain percentage of your income in taxes based on which level your income falls into. These brackets aren't one size fits all. They change each year. The government adjusts them based on inflation and other economic factors. The United States uses a progressive tax system, which is designed to ensure that those who have the ability to pay more do so. This means the more you earn, the higher your tax rate. It's a way to balance the scales and ensure that everyone pays their fair share. But, and this is important, you only pay the higher rate on the money earned within that specific bracket, not your entire income. This is a common misconception. Imagine a ladder. Each step represents a tax bracket, and as you climb higher, the tax rate increases. As your income climbs, you step onto higher rungs. But remember, only the income within each step is taxed at that step's rate. However, you only pay the higher rate on the income that falls within that step, not the entire ladder. This ensures that your entire income isn't taxed at the highest rate. Let's say the first few $1,000s you earn are taxed at 10%. This is the base rate for the lowest bracket. Any money you earn above that amount might be taxed at 12%, and so on. Each bracket has its own rate. This ensures fairness, as those who earn more contribute a larger proportion of their income to taxes. It's a system designed to be equitable and just. You may disagree on the definition of fairness, since the very wealthy have tax breaks. The special 20% deduction for pass-through business income is also heavily skewed in favor of high-income people. They get a much larger share of their revenue from pass-throughs compared to other income groups. They also have investments that provide them tax-free benefits. The wealthy receive the largest tax break per dollar of income deducted. We can learn these strategies in a future video. Your income determines your tax bracket, which is crucial for understanding how much tax you'll owe. Each year, the IRS publishes a new tax bracket table, reflecting any changes in tax laws or inflation adjustments. This table outlines the income ranges for each tax bracket, helping you see where your income falls. Finding your bracket is as simple as locating your income level within this table, making it easy to understand your tax obligations. Remember, these brackets are marginal, meaning only the income within each bracket is taxed at that rate. If you move into a higher bracket, it only affects the portion of your income that falls within that new bracket, not your entire income. You aren't suddenly taxed at the higher rate on your entire income, just the amount that exceeds the previous bracket. Section 4. Real-life examples. Let's look at an example to better understand how tax brackets function in real life. Imagine someone named Sarah who earns $50,000 per year from her job. For simplicity, let's assume there are 3 tax brackets: 10% for income up to $20,000, 15% for income between $20,001 and $40,000, and 20% for income above $40,001. Sarah would pay 10% on the first $20,000, which amounts to $2,000. She would then pay 15% on the next $20,000, which comes to $3,000. Lastly, she would pay 20% on the remaining $10,000, which is $2,000. In total, Sarah would pay $7,000 in taxes for the year. This is a simplified example, but it clearly illustrates how tax brackets work in practice. Your tax liability isn't a flat percentage of your total income. Instead, it's calculated step by step, based on the income within each bracket, ensuring a fairer distribution of tax burdens. This method ensures that higher income is taxed at higher rates, while lower income is taxed at lower rates, making the system progressive. Section 5. Key takeaways. Understanding tax brackets doesn't have to be complicated. Remember, it's a progressive system. You pay a higher percentage as your income increases, but only on the income within that specific bracket. The key is to determine your income level, find your tax bracket, and understand how much you'll owe based on the current tax rates. If you're learned something new, hit that like button. Subscribe for more great content. Please tell us what topic you would like to see or leave a comment on what you liked.